While watching bullish price actions, let us inform you our review on IBG. Innovation Beverage Group Limited just sent shockwaves through the market with a jaw-dropping 153% surge in its stock price after announcing a major U.S. distribution deal with Republic National Distribution Company, RNDC. This isn't just some small-time contract. RNDC is one of the biggest alcohol distributors in the U.S., which means IBG's Australian Bitters Company and Bittertails brands are about to get some serious exposure across 6 key states: California, Oregon, Washington, Hawaii, Arizona, and Michigan. But as is often the case with these kinds of explosive moves, what goes up tends to come down, and the stock dropped 28% in after-hours trading. Let's break down what this all means for investors and whether this deal is a real game-changer for IBG or just another hype-driven spike. First, the distribution deal itself. Partnering with RNDC is a huge step forward for Innovation Beverage because getting shelf space in the alcohol industry is one of the biggest hurdles for smaller brands. RNDC's reach spans across multiple states and thousands of retail locations, bars, and restaurants. That means IBG's bitters, which have already dominated the Australian market with a 45% market share, now have a real shot at breaking into the massive U.S. cocktail scene. If these products catch on, IBG could see a significant boost in sales and brand recognition. But here's the key question. Will that actually happen? The U.S. alcohol market is fiercely competitive, especially in the bitters category, where big names like Angostura and Peychaud's already have deep-rooted dominance. IBG has a strong product, no doubt. Achieving 45% market share in Australia is no small feat. But whether they can replicate that success in the U.S. depends on how well they execute their rollout. The RNDC partnership gives them a foot in the door, but it doesn't guarantee demand. It will take solid marketing, strong relationships with bartenders and retailers, and a compelling consumer campaign to make sure their bitters actually move off the shelves. Now, let's talk about the stock action. A 153% intraday jump on 219 million shares traded is an eye-popping move, especially for a company with a market cap of just $10 million. For context, IBG's average session volume over the past 100 days was only about 310,000 shares. So today's trading was on an entirely different level. That kind of volume spike usually means one thing: a wave of retail traders jumping in, likely fueled by momentum and FOMO, fear of missing out. But as we saw after hours, the party didn't last. The stock gave up 28% of its gains in post-market trading, a classic sign that some early buyers were taking profits and cashing out before things settled. This kind of price action suggests that while the RNDC deal is a big step forward, investors still have questions about IBG's long-term fundamentals. One thing to watch is whether IBG can capitalize on this momentum and follow up with more big moves. Expanding distribution is great, but without strong revenue growth, today's surge could just be a short-lived spike. The company will need to show actual sales traction in the U.S. and possibly expand its RNDC agreement to more states. Additionally, IBG's broader portfolio includes premium vodka, gin, and ready-to-drink cocktails. If those products start gaining traction alongside their bitters, it could help build a more sustainable growth story. For investors, this is a high-risk, high-reward scenario. On one hand, IBG just landed a major distribution partner that could significantly accelerate their U.S. market penetration. On the other, the company is still small, and it's unclear if this deal alone will translate into meaningful financial growth. The after-hours drop suggests that many traders saw this as a short-term trading opportunity rather than a long-term investment. Bottom line, this is a company to keep an eye on. If IBG can execute well, this could be the beginning of a major expansion story. But for now, the stock remains highly volatile, and investors should be prepared for a bumpy ride. Please subscribe, give the video a like, and watch more from our playlist. Thanks.